Okay, second question. TJ is a trader who sells goods on credit. His year end is 28 February. TJ provide the following information. This beginning of the year. This is end of the year. Okay, now let's continue. See what is the question they ask. Okay, in here, the provision for doubtful debt was 4% of trade receivable at 1st March 2020 and 6% of trade receivable on this 28 February. Then they asked to prepare the rent payable account for the year ended. Okay, let's prepare the account. Okay. Here, other receivable, rent prepaid. So rent prepaid is an asset. So asset, we should have the debit side. It should be in the debit side. So in this date, put the year first. After that, the month, put balance, write down. So this is the beginning of the year, 300. Okay, now the next is rent charge for the year. Rent charge for the year. For the year means that 1 year. So 1 year is for the year. This is the income statement amount. This is an expenses account. Expenses account income statement is in the credit side. So 2021, February 28. Okay, income statement. So 3900. Next is, let's see, check payment for, this is a make payment to the rent. So we have 2 dates with different date. So we have to put into here, June 30th. So this is a bank because using the check 1950. And then another date is November 30th. This is also bank because it's a different date, but both made by check. Okay, now there's no more other information given. So we need to calculate. This question had to calculate the balance carried out is how much. So we need to calculate the subtotal. So here is 4,350. So it means that we have the debit balance. So in this case here, we have to put in balance carried out. So take this amount minus, so we get the 450. So this 450 will bring it to here. 450 bring it to here. And this will be 2021. Okay, 2021. Okay. May and March 1st balance brought down. So this amount should be 450. Okay, so that for the rent payable account. So this is the account that we prepare. Now next is that, okay, second is they ask to prepare the provision for doubtful debt. So with the information that we have, let's see what are the information that we have. Okay, beginning of the year. This is the beginning of the year is 4%. So provision account, always remember, must be in the credit side. The balance brought down. It must be credit side. So here, 2020. After that, March 1st, balance down. So how we calculate this amount? So this amount actually is, we use the, this amount is taking the 6250 times 4%. So this is how we get the opening balance. So we take 6250 times 4%. So 250. And they given us the closing 6%. So closing must be in the debit side. Balance carry down must be in the debit side. There is must. These two balance brought down, balance carry down. Balance carry down. So how we calculate the balance carry down? We take the closing balance 7,000, 7,000, here 7,000 times the 6%. So now our closing more than the opening. So in this case, on this date, 2021, February 28, we have the income statement. This is an increase on the provision. This increase indicate to us this one is expenses. So this expenses is increase in provision for doubtful debt. Okay, so now take the total. Okay. So don't forget balance carry down. Balance what down must be complete. 201. Then March 1st, balance brought down 450 and 420. So this is the amount we get for this provision for doubtful debt. Okay, so now let's move on. Okay, for the C, they say that name the accounting principle apply when income statement is adjusted for the rent prepaid. So under the other payable, other receivable topic, there are three principles. So there are three accounting principles. There are three accounting principles. Just go for some revision. Prudence, matching, and then consistency. So these are quite common three items that you're talking about the topic. So in here, prudence is not to overstate the profit and the asset, whereas matching concept is cost or expenses matched to the revenue earned. Cost incurred or expenses incurred matched to the revenue earned. Consistency talking about the method. So method in here is not so important for the other payable, other receivable topic. So more important is these two, prudence and matching. But because this is talking about adjustment for the rent prepaid. So this rent prepaid adjustment is using the matching principle. Okay, the answer should be matching principle. Explain how the realization principle is applied to the recording of TIJA credit sales. Okay, realization. What is a realization? Realization is talking about realization principle is the realization principle is recognition of the revenue earned when the ownership transfer to buyer. So there is a general idea is when we should recognize the revenue, when the ownership transfer to the buyer. Okay. Other than that, what else we can talk? The sales should not be recognized if the risk of the risk and the ownership have not transferred has not transferred to buyer. After the transfer of ownership, then the sales and profit can be recognized. So this is the answer that we can put. Okay, now next is that explain how prudence is applied in maintaining the provision. Prudence generally is talking about profit and the asset should not be overstated. So we talk about general rule first. Prudence principle is to avoid profit and asset overstated by providing provision for doubtful debt, the expenses increase due to estimate loss of the debt dash reduce the revenue earned this also ensure the trade receivable reduce and asset also reduce. Okay. So this is the prudence. Okay. Now next, TJ sell to a small number of customers. He has a good working relationship with them and they sometimes recommend him potential customer. TJ is concerned about that his customers are taking long time to pay. He is considering charging the interest overdue. Advise TJ whether or not he should charge interest on overdue account. So whatever question once is advice justified, you always give two impact, agree and disagree. So first we talk about agree first. If TJ charge his customer interest on overdue account, some of customer will pay earlier and this improve his cash flow. There is a good thing about it. So this will encourage the cash flow. Cash flow, improve his cash flow. At the same time, the administration cost and time can be reduced. So this is the advantage of it. Okay, now next is that, however, there are some risks may face in future. TJ may lose his customer due to some customer may not happy with the interest charge. Moreover, he sell a small number of customers only. This will give significant impact on his revenue and profit. So this is an important, serious thing since that is so little customer base. Okay, other than that, this question basically is have disadvantage more than the advantage from my personal point of view. Okay, he has good working relationship with them. Each can call them up frequent, more frequent and remind them to pay earlier rather than charge late interest. Okay, so now okay, one more sentence, make a conclusion. For PJ, I would not agree. I would not agree he charged his customer interest on overdue account because it have significant impact if most of customers are not happy with his action. So this is my idea. I not agree to charge for it. So that's for the question number 2.